Hatem Dhiab joined me earlier from Gerber Kawasaki Wealth and Investment, and I started by asking Hatem, what can investors be looking for in terms of the iPhone 15 sales?
I was actually pleasantly surprised because the iPhone itself, the new one, doesn't have a lot of changes, but demand is actually strong enough if you look at the lag time for ordering, and especially in China, which, as you know, there's a lot of negativity where the government basically forbidding government employees from owning iPhones. So the fact that the demand is still strong there, and it's a big market for Apple. Over 20% of their sales comes from China. I think is a welcome news for investors.
And have they changed the price points at all for this new iPhone 15? And if they have or have not, what is that kind of signifying to you in terms about their stance on potential demand?
Well, as you know, inflation has been a big problem, right? And everyone is looking for any signs of inflation dissipating or going down. The fact that Apple did not increase the price on many of its iPhones, only on the Pro models, was actually pleasant for me, because that means that there is maybe some pricing pressures. And then also them basically admitting that, the macro elements are getting stronger and the consumer is maybe getting squeezed. So as a result, maybe they don't want to push prices even higher.
Looking at Apple over a more medium term, longer term outlook, are there concerns about the whole geopolitical thing with China having to move more of their manufacturing away from China? Or is it a case that Apple, in its own right, is such a big employer of people in China that they'd be shooting themselves in the foot, they being the Chinese, to really cut off what is a great source of employment for their people?
I Such a good question. Apple has more employees in China than they do in the US. So yeah, you're absolutely right. They're a huge employer there. However, the Chinese government has shown us that they're really prone to being very fickle with any American company or any international company. So the risk is real, and I think that's why you've seen Apple starting to move a little bit towards India and trying to diversify their supply chain. While Apple only has 20% of their revenues in China, almost 80% of the iPhones are made in China. So they're very, very much relying on it. So I think everyone is being spooked a little bit about what's going on geopolitically, and I think they need to diversify.
Absolutely. Now let's turn back to America, and we are seeing those US Treasury yields marching higher at the moment. How much of an impact do you think that's having in terms of valuation compression for technology stocks, which are typically rated as having they're being longer dated assets?
Yeah, there's nothing worse for technology stocks than rising rates and decelerating growth. And these are the two things that we're seeing right now. So I think what you've seen the last 3 months, or basically, yeah, this summer, is that, valuations really has come down because of these rates really spiking, and the Fed is being very hawkish.
In terms of cost cutting, a lot of the major tech companies were doing a lot of layoffs earlier on in the year. Is it going to be potentially a position that they may have to look to start to rehire down the track?
Yeah, I mean, I'll be a little bit of a contrarian, because last year was really tough for tech. Even this year, we've seen a ton of layoffs. We've seen a ton of cost cutting. I mean, Zuckerberg's year of efficiency has been a term that's been said everywhere. Every CEO in tech basically used this year as a reason for them to cut cost and lay off. But arguably, I think going forward, you're gonna start seeing these tech companies needing to invest, because I think we're starting a new cycle of growth, new innovation cycle, really brought by generative AI. So I think the pain is probably behind us.
That's very interesting. Now let's touch on generative AI, because we have seen some of the share prices like Nvidia retreat. There will be a lot of naysayers saying, well, it's all a big bubble. But is there really a lot more to this investment cycle and to these companies in terms of earnings growth?
Yeah, I mean, you don't see companies as big as Nvidia triple their revenues in 2 years and say that's a bubble. I think we've never seen a technology that impacted so many different sectors, and that's really what generative AI is doing. And what's happening is a lot of any CEO, any company right now is exploring and trying to figure out how this new technology is going to impact their business, and as a result, they have to invest. Right now, you're seeing mostly Nvidia. So right now is the excitement phase, the investment phase, where Nvidia and also the hyperscalers, the Microsofts, the Googles, the Amazons are benefiting most. And then afterwards, I think we're going to see that broaden out.
Interesting. Now, you have the UAW strike at the moment, and I heard someone commentating that Tesla stock is down 10% since the strike started, which is a bit of an anomaly given the fact that Tesla workers, A, are non-unionized, and B, one of the concerns for the existing OEMs is that they are going to transition and the workers are concerned. What are your thoughts on Tesla at the moment?
Well, Tesla is definitely the biggest winner from this strike because their factories are not closed, while GM and Ford are. I think the fact that they don't have unionized employees is actually a benefit because a lot of Tesla employees actually get Tesla stock. If you are a Ford or GM shareholder, you haven't really made any money in the last 5 years. Au contraire, if you were a Tesla shareholder, you've done really well. So I think Tesla employees are very happy. Now, the fact that the stock is down 10, 15% the last month or so, I think is just because the market in general is pulling back. There is bigger concerns with Tesla, I think mostly around Elon and him being distracted and so forth. But ultimately, the company is doing really well.
The third quarter earnings, they haven't checked, but they're probably out in the next couple of weeks or so.
Yeah.
Are there fairly high expectations there, Hatem, for these earnings results?
We're not really expecting a big quarter. I think margin compression has been an issue for Tesla. These price cuts that they have had to do in China and here in the US really have brought down margins. So I think, the earnings are probably not going to be great. But Tesla is really focusing on unit growth and volume growth. And with Berlin opening up and then we're not opening up, but scaling up, and then obviously Austin and the Cybertruck hopefully come in the end of this year. I think we'll see positive momentum, just maybe not this quarter.